what a headline to start off with. So as you can see, housing market sees busiest ever start to a year. Now, I'm sure you're all aware, Rightmove is the biggest property portal by far in the UK. So they're very much the ones that I listen to when it comes to general market activity, and they've reported 2021 to be the busiest start to the year they've ever recorded. Now, they report visits to their site are up by 30% compared to the start of last year, with sales inquiries up by 11% and lettings inquiries up by 22%. So certainly no rest for estate agents so far. Now, let's not forget that we've been in a mini housing boom since the reopening back in May. So it's no real surprise that record numbers are still being put out there. The demand has led to increased annual house price growth, with further predictions for that to continue in the first quarter of this year. Now, annual house price growth moved to just under 4% at the end of 2020, which is up from 1.3% recorded the previous year, and predictions suggest this could rise to 5% in the next few months. The average price of a house in the UK is now just below £223,000, which represents an increase of just over £5,500 in the last 6 months alone. Now, broken down, the average UK property increased in value by £27.81 per day throughout 2020. When you do the maths, times that by 365, that's just over about £10,000. So at least property owners can celebrate something in 2020. Zookla's reported a huge increase in demand in 2022, seeing 40% more buyer demand in comparison to 2019. However, they also reported new stock onto the market was only up by 4% in 2020 versus 2019, which would suggest a supply and demand mismatch and some clear insight into the fueling of house price growth. Now, some further statistics here. So 2020 also recorded an increase in sales agreed across the country of 9% compared to 2019, and the monetary value of sales agreed last year is 26% higher than previous. This increase equates to an additional £62 billion of sales, taking an annual total to over £300 billion, staggering amount of transactional value. Well, you'd think so, but whilst on that subject, another little stat I've come across, that the total value of UK housing stock in 2020 is approximately £9 trillion. Now, I couldn't even tell you how many zeros that is, so if anyone knows, put it in the chat. How many zeros come after the 9 in 9 trillion? I'll be intrigued to see what that looks like. There's been a reported increase in property sales in more affluent demographics, so certainly in parts of the market where stamp duty savings are higher. And remember, there were and still are savings of up to £15,000 on offer for purchases up to £500,000. And just whilst we're on that topic, very quickly, I have been asked a few times, certainly since coming back in the new year, about the stamp duty holiday and whether or not it might be extended. Now, of course, I can't guarantee anything, but I've had a real look around, and there are no reports suggesting the government are considering an extension. And my personal opinion is that as long as the housing market remains open and not affected by lockdown, it's very likely the deadline will stay in place. So if anyone was unsure about that, that's certainly my thoughts, but we'll keep monitoring the news and see if anything else happens. Now, I just want to have a look here as well at the mortgage world for a minute, as there's been a few things to discuss of late. So the value of mortgage approvals for home purchases in October is 68% higher than a year ago. I think this is a result of the heightened activity at higher price ranges and larger homes, of course. October also recorded a 13-year record high of 98,000 mortgage approvals, and that got smashed again in November, where a further 105,000 approvals followed. So really busy time for brokers and lenders at the moment, that's for sure. Now, obviously, I'm hearing a lot of reports about surveys taking a while to instruct, underwriters taking longer, mortgage offers taking longer. This just gives you a bit of an insight as to what might be going on there behind the scenes. Now, some of the best news coming out of the mortgage world for me at the moment is the return of 90% loan-to-value mortgages, which is great news for a lot of buyers who have been frozen out for a while, particularly first-time buyers. Now, the reason this is such huge news, let me just paint the picture for you. In January 2020, when life was a bit more normal, and we were all making our plans back then and probably breaking our plans pretty quickly, no doubt, there were around 762 different products available to buyers with a 10% deposit. Access to borrowing was great and people's plans were well and truly able to go ahead. Well, following the first major lockdown last spring, that number all of a sudden fell and went as low as around 50 products from just a few lenders, and there were pretty high rates and tough criteria attached with those as well. Now, right now, we're back up to around about 160 products, and pretty much all of the main lenders are back in the game with rates relatively competitive. It is, of course, important to remember This is referring to the residential mortgage market. So I know a lot of people here with us this evening would be more into the buy-to-let market. Of course, you're still looking at a 25% deposit for that sort of purchase. And that market has remained consistent and strong with pretty competitive rates in the region of about 2.5%, I'm told, as of a few days ago by my mortgage advisor. Now, if anyone wants more info on what's available for them at the moment, I recommend you talk to a mortgage advisor. I just look at it as a snapshot to give you a bit of an idea of what's going on. So if you need an introduction to anybody, I actually refer to a chap who has kindly agreed to drop all broker fees for any of my clients. So obviously just get in touch and let us know if you want to have a chat with someone in that regard. So moving on, and just a quick look at leasehold properties or flats. Now, I'm going to apologise if you own a flat, then perhaps look away for this bit, as the statistics have shown price growth for houses is more than double that of flats. Now, realistically, there has always been more appeal to freehold over leasehold, but it's likely the demand has decreased further in recent times as people crave more space, particularly outside in the garden department. Now, in fact, the most frequently used search term by home hunters in 2020 was actually the word garden. So there you have it. That kind of shows you where that's come from. But there may be some good news on the horizon, which I wanted to share in case anybody missed it, as a major leasehold reform is on the cards. Now, this came out in the news literally within the last week. If it's passed, which I'm very much expected to be, then what this could mean is ground rents taken down to zero, which could save thousands of pounds for leaseholders. Everyone would have the right to extend their lease to 990 years, as I understand, along with a cap on the cost of the extension and potentially purchasing a freehold as well. And there'd be a new online calculator introduced to make it easier and more transparent on costs. So one of the biggest things that I've faced, one of the biggest challenges I've seen people face throughout my career is how much does it cost to extend a lease? And the reality is I've known it to be as little as 2,000, I've known it to be as high as 20,000. And it's so hard to advise anybody, and some people feel like they're getting really stung. So I think some of the rules that they should be introducing are going to be a really good thing for the leasehold market. So that sort of brings us to the end of my little sales market update. And what I really want to know is what are your thoughts on what 2021 might bring us? For anyone active in the marketplace, just give us your opinions in the comments and share your thoughts with us. It'd be interesting to see what you guys are expecting. For me, looking at the statistics of growth in demand, inquiries, sales agreed, mortgage approvals, growth in value, and now the 90% loan to value mortgages back, I see no reason for any major shifts. It's a really brief snapshot, but I think it will drive my thoughts and point on this home. In my last market update, I reported a 50% increase in tenant demand in the second half of last year. And as I said at the start, Rightmove have reported record numbers of inquiries in the new year so far. The current stock levels are lower than we're used to across the board. Demand outweighs supply. Average rental values are constantly increasing across the UK, and in our area here of Wolverhampton and the West Midlands, we're experiencing above average growth. Now, the gross yields on residential property in this area are now above 6%, and that's just the average gross yields. So I would say there are some excellent reasons why you want to be a landlord and invest in buy-to-let properties, and I know there are so many people active in the marketplace. Again, based on the stats, I see no reason why anybody considering investing in 2021 shouldn't make plans and go for it. The stats are there that, in my opinion, are really on a landlord's side at the moment. But again, if there's any active investors right now watching, which I'm sure there are, give us your views in the comments. What are you experiencing? Is there deals out there at the moment that you're happy with? Does what I just said, resonated? Does it make sense? Do you agree? Do you disagree? Just let us know. It'd be interesting to hear from you.